The 3-day weekend that starts the summer market is upon us, and this week's update shows it. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, May 22nd. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos, so you can know how the market is impacting your options as a home seller or buyer. Starting off, we like to look at how the market performed over the past week. There are now 75 homes on the market, which is 5 more than the 70 we had last week. Average asking price is roughly the same, $1,884,000 compared to the $1,858,000 we had last week. Only 3 homes went pending this week, which is significantly lower than the 10 that we had last week. And more importantly is how low the average asking price of those pending sales is this week, down to $1,352,000 when it was just under $2 million last week. 9 homes closed, which is better than the 7 we had last week, and that average closing price is decent at $1,892,000, just under that 1.9 to 2 million range that I've been talking about. I think the market will settle in at, and lower than the $2,021,000 we had last week. Okay, so now we know how the market performed over the past week, and next we always like to look at the indicators that tell us where the market might be heading. Before we do that, if you do find this information helpful, why don't you hit that subscribe button down below so you don't miss out on future updates. And while you're down there, you can also hit the share button and send it to a friend. Everyone deserves to be in the know about their local real estate market. Okay, let's look at those broader indicators. Inventory jumped back up this week, like I already said. While the last time we saw inventory climbing was a result of new homes entering the market, this week's jump has more to do with the significant lack of pending homes. With only 3 homes pending this week, we could have seen the inventory trends continuing down if only those pendings had matched the average that we had seen over the past month. As it is, inventory did climb, started coming back down, and now it's back up again. The other result of an anemic week of new pending sales is that our turnover rate has dropped below that 50% line again. Like I mentioned in the inventory segment, this is all about the lack of new pending sales this week. Coming soon listings are still low, so if we get a normal level of pending sales next week, this indicator should reverse course and go right back to that positive upward trend like we saw last week, or the past few weeks, I should say. While the current stats were underwhelming, this week the lagging indicators remained very strong. The over-under numbers improved this week, with houses closing at 13,000 over asking on average, which is just under 1% over the asking price. But it continues to demonstrate that the right preparation and marketing is still getting strong interest from buyers. Likewise, the sales price is still holding strong also. It remained healthy at 1.93 for the 30-day rolling average. That is a little lower than the average last week, but right in that sweet spot of the 1.9 to 2 million range that I keep saying I expect it to kind of settle in at for the rest of the year. The Triple Q fund did take a step back this week after over a month and a half of surging numbers. So it's kind of just more like flattened out. It dropped about 1% below last week's closing numbers, but really it's more of a leveling off over the past couple of weeks than a reduction in value. I'm surprised it took this long to have a soft week after the conflict in Iran started, but a 1% drop isn't much of a setback. It will be interesting to see where it goes next week, if it continues to soften or level off, or if it returns to its growth that we've seen over the past month and a half or so. Unfortunately, interest rates are reacting more in line with how I would expect the economy to react when dealing with the uncertainty from fuel prices caused by the conflict. They are now above 6.5% again, a level they have not reached since September of last year. The high cost of borrowing the money necessary to purchase a home will continue to be the biggest drag on our market. As we head into the long weekend that typically signifies the start of summer, our market has decided to stall out even more than its already sluggish pace. The low pending sales numbers, coupled with the rise in interest rates, stand to slow down what is already a slower season with families traveling. However, homes that are selling can still sell quickly when marketed well. The median days on market for all homes currently pending in San Ramon is only 14 days. Sellers are still finding reasonable success in this otherwise trying market. This week, I'm concerned about the slow pace of pending sales and the rise of interest rates, but these are both areas that will be closely watched in the coming weeks. Thank you for joining me for this weekly update. I hope it does help you understand how the market is impacting your options. Don't forget to hit that subscribe button down below and ring the notification bell so you know, continue to know how the market is shaping up as we head into summer. And if you have any questions about how you can handle the stressful and confusing process of selling or buying, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Have a safe 3-day weekend. We'll see you next week with a new update.